Let's get you all the business news of the day now. And after a day's hiatus, bulls were back on the Lal Street while realty and energy sectors advanced. IT and FMCG were under pressure. Alex Matthew with the wrap of all the market action.
How far will this rally take us is the question a lot of people are asking with regard to the Indian equity markets. As we breached the 19,500 mark on the Nifty 50 in trade today, we've gained for 8 sessions in a row. And if you look back to the start of June, that index has gained over 5.5%. A lot of volume increases in specific stocks on the weekly expiry is what you saw in trade today. But it was pretty much broad-based gains, and that is surprising considering the kind of setup that we had at the start of the day. The Gift Nifty had suggested a negative start, but that wasn't the case. And in fact, we've held with those gains throughout the session. Let's look a little closer at the contributors then. You had the Nifty Bank that continued to gain ground. It was up about 0.4% in trade today, but auto was the bright spot. We'll talk about that in just a bit. It gained over 1%. I'm talking about the index. Realty was the other bright spot, gaining over 2.2%. The laggards were the FMCG stocks, which showed just a little bit of fatigue. That index, by the way, is the top performer sectorally in the year-to-date period. And then you had the IT stocks that underperformed. That index was lower by about 0.1% or thereabouts. But look at the key performers on the Nifty 50. Mahindra and Mahindra, no trigger as such, but you saw quite a lot of options build up in that counter, and you saw the counter gain as much as 5%. Apollo Hospitals gained close to 4%. Then you had Power Grid and Tata Motors that also gained ground. But you had Reliance Industries, the big boy, that gained about 2% and contributed to quite a lot of the gains on the Nifty 50. Among the losers, you had Eicher Motors that continues to lose ground. It's down about 3% or thereabouts in trade today, 2.7%, but down about 10% in the month so far as competition heats up in the segment that it plays in. Maruti Suzuki down about 1%. You had HCL Tech and Bajaj Finance also losing ground. CEAT, according to me, is the stock of the day. Again, no clear trigger here. This is a stock that gained about 20% in trade today before ending about 19% or 18% higher. It breached the 10,000 crore market cap level in trade today, and that's certainly the highlight of the session so far. Hinzinc also gained about 8%. That company is going to consider an interim dividend. And then you had JBM Auto on the other end of the spectrum losing about 10% or more than 10%. That script is set to replace HDFC in the BSE 500. All told, the party continues. The question is, how long?
According to Anirudh Sarkar of Quest Investment Advisors, consumption, industrials and financials are the growth pillars for India. He's bullish on the industrial sector, which is seeing the biggest capex cycle. Listen in.
If you look at our portfolio, you will find that, it's all India oriented, wherein I'll break up my portfolio to these 3 major buckets. One is India consumption, second is industrials, and third is financials. So these 3 form the pillars, I would say, of the whole India growth story, wherein begin with industrials. That is where the big capex is undergoing, whether you talk about Atmanirbhar Bharat, PLI schemes, defense manufacturing, capex from the private and the public. That is where the big industrial activity is happening, and that is going to be the first engine of growth. That engine of growth, it leads to household incomes going up, and that is where the India consumption theme comes in. And when I say India consumption theme, we are playing across different subsectors within consumption, and that is where I see the growth opportunities. It could be your hotels, it could be the retail, it could be your autos, auto ads, it could be the fast food outlets. So these are the different opportunities within, and the real estate, so not to forget. So these are the different subsectors within the India consumption. And thirdly is financials, which is kind of, again, a major pillar of both the first 2 themes. Industrial, if you're talking about capex, if you're talking about corporate borrowing, that is where one part. And if you're talking about consumption going up, that is where the retail borrowing goes up. And the savings and investment. So these 3 things, I would say, go hand in hand. And that is where I see the big growth opportunities for the next 36 to 48 months. Just to summarize, industrials, which will include all your cement, capital goods, your heavy engineering, defense, everything. Consumption, which is your urban consumption, Indian consumption. And lastly, which is financials.
Commercial vehicle sales in June surpassed the pre-COVID levels for the first time with a growth of 1.5% compared to the sales in June 2019. The two-wheeler sales rose 6.8% year-on-year in June, and in the passenger vehicle category, the sales grew to 2.95 lakh units amid a mixed landscape of lower demand for hatchbacks and slowing sales in other categories. It was the three-wheeler and tractor sales which saw a significant rise in sales, with three-wheelers clocking 75% rise over the last year. Unusual weather in parts of India because of rain and a decline in consumer appetite to spend dampened retail sales in the month of June. Sisa Sen joins in with more.
So if we look at the quarterly updates of FMCG companies for Q1, one thing that stands out is that rural consumption remains fragile and it will take yet another quarter for demand to revive materially. Marico, for instance, said it expects to see a drop in the June quarter revenue on sluggish rural demand. However, at the same time, what we are seeing is that not all product categories are seeing a slowdown. Companies dealing in edible oil saw a good offtake as they passed on the benefits of lower input costs to consumers. Marico's Saffola range saw a double-digit growth helped by price cuts that made its cooking oil nearly 30% cheaper from a year earlier. Similarly, Adani Wilmar said that its first quarter volume growth surged 25% owing to strong demand, again thanks to lower edible oil prices. Yet, companies dealing in summer products like beverages shall face the heat. Data shared by BISM showed that among the various categories affected, beverages took the hardest hit, with sales falling 27.6% in the June quarter. According to Akshay D'Souza, Chief of Growth and Insights at BISM, there also seems to be a lower spending in purchase of discretionary products, which is evident in sales of both personal care and confectionery products. However, there is a silver lining for consumer good companies. Prices of most raw materials have eased, and this is going to have a positive impact on profitability.
Adani Green surged in trade today after the board approved a fundraise of 12,300 crore rupees. The company will raise funds via qualified institutional placement or other permissible mode. The fundraise is subject to necessary shareholder and regulatory approvals. Remember, last week, GQG Partners raised its stake in Adani Green to 6.32%, valued at 9,600 crore rupees. With that, it's time for us to slip into a short break. More news on the other side.